And we've been talking about this, and Coach Matt has nailed gold analysis. And while we're talking materials, we might as well talk gold here a little bit. We'll come back to the last sector in just a second. You look at this gold chart, gold miners, Tyler, put in the higher pivot, those subtle things in technical analysis.
Yep.
They matter. They really do. They may not matter on any given one day as you're reading it, but over time, as the information changes, higher pivot low,
yep.
coming up to the resistance, didn't sell off. You take one on the chin, but instead of coming range down, you just have 1 or 2 days. Then the consolidation forms. Here we are breaking higher, Tyler. Give me a thorough read on that chart outside of anything you want to add to what I just talked about.
No, the two phrases that came to mind, making money with trading is all about timing, and technical analysis provides the best timing tools available. And this has been a masterclass over the last couple of months in terms of how that works. You think about what happened with the NASDAQ, where you got a higher low, you broke out, you ripped. This has been a little more subtle. I mean, GDX gaps a decent amount, but even so, the pivot formations have shown you that sentiment changed, right?
Mm-hmm.
And the other thing too is the last week you had nice consolidation to where, unlike the last upswing where you got punched in the face and you had a pretty good pullback off the 50, this one you rally and you rest, right? It absorbed any selling coming in. A base is more constructive, more bullish than a retracement. And sure enough, and look, you wouldn't have known yesterday. You would not have known yesterday that today was going to be the day, but it doesn't matter because you would have known that the level it needed to break was 34.80, right? And so there's a difference between us saying, hey, yesterday you should have known this was going to rip today. No, not true. But you should have known there was a higher pivot low. You should have known there was a nice high base. You should have known the ceiling that needed broken to signal the breakout was 34.80. You could have figured all that out before today, right? It's not like you have to come in here 3 hours into the trading session and say, oh, shoot, I should have been looking at GDX and known that 34.80 was the level. And this is why you have alerts. This is why you put in alerts. You look at charts and you say, look, that is the level that interests me. If it gets there, I'm interested in looking at it and doing a trade. I think in this situation, it was obvious what you wanted. And sure enough, when it broke 34.80, to its credit, all it's done is gone straight up all day long. And that's about as good as it gets when it comes to follow through, instant profit. Everybody wants to make money 5 minutes after they get in, 30 minutes, an hour after they get in. Doesn't always happen. This time it did. Look, if this goes back to where it used to be, there's plenty of potential upside from like a position trading perspective. I want to take it a day at a time just because we've had other, failed rally attempts in gold and such. But I think the base that this formed before the breakout lends itself maybe to me having more confidence that this has legs, that I'm willing to maybe be a little bit more optimistic about this than maybe the last couple of breaks above the 50 MA.
Mm-hmm. Yeah. Greg, how are you reading gold miners? And I do want to go next directly to gold analysis, Tyler, on the next chart. But Greg, how are you approaching the gold miners right now? I know these are the kind of companies that you've been watching for your entire career. So it's probably grabbed your interest and piqued your interest. And we've been nailing this on the halftime report. I got to give Coach Matt credit. I mean, he has hit this day by day by day by day, specifically on gold, but even on gold miners as they're correlated, obviously. Talking about these conditions, Tyler, you've been here. We've all been here when we're doing it, and he's hit it right on the head on this one. Greg, how are you approaching this?
Yeah, so I couldn't do a better job of the technical analysis than Tyler did, so I won't even bother trying. I think one of the things that I found interesting about gold was when everything else has kind of been running and very heated, gold was one of those sectors that was giving us a good risk reward setup. So, you found after you got that pivot there, that retracement, it gave you a low risk entry for a decent little run there. Now we've got a breakout. You've still got obviously it's running today, but before, had you looked at it before today's candle, you had yourself a really good setup there, a low risk setup. with a lot of upside potential. So this was one of the areas of the market where, it hasn't been, really screaming along. As a matter of fact, it kind of was getting a little beat up there. And that really is what kind of I look for. I want to look at those sectors where, I know that really fundamentally, nothing has really changed, but technically, it's giving you just these opportunities, these setups that are just magic, right? So I love the way gold's set up here. It's reversed. It's set up the higher lows and the higher highs. It's just, as far as I'm concerned, it's beautiful. It's just a work of art, really. And you've got opportunities here. Even now, we're going to get a pullback to that 35 level. Like it's going to happen, right?
Mm-hmm.
That's another entry point, right? If that support now holds, that old resistance, you've now got another entry. As Tyler said, if you're looking position trade wise, you've got a lot of room to run to even get back to levels from a year ago, right, or 2 years ago. So just a really good setup overall. Like I said, the dollar is showing a bit of weakness too, right? When you start looking at gold, you look at the U.S. dollar, and it is showing a bit of weakness. So it is correlated in that manner where typically you start to see a little bit of weakness in the dollar, you do get that upswing in gold. So you've got that tailwind behind you as well. So technically it looks good. Fundamentally, there's lots of reasons. The interest rates dropping, that's going to affect the gold prices as well. You've got a lot of things really helping you out here, as far as I'm concerned.
Let's look directly to that futures contract if we can, Ty, and then also have a discussion about the dollar, because these are all correlated or inversely correlated with the dollar. Obviously, it's all connected in the analysis. And the GDX is looking great. One thing I love about GDX is I don't have to have it rip from 36 to 44 for me to want to be in that trade, because it is a wonderful covered call instrument. So if I'm loving liking or enjoying the technical conditions as they are developing on these breakouts, I can approach it with shares. And then as I feel like it tops, I can write calls and collect premium. Over the years, it's been a wonderful product for that. Options are liquid there. And a lot of the analysis on GDX is going to be based on that GC as well. So let's move on to that GC and talk about it a little bit, Ty. Ty, it might be a work of art chart if you truly understand what you're looking for here. Break it down for me.
Yeah. So for those that have been asleep or not joined us the last couple of months, it's been all about this double bottom pattern, which when you think about the psychology, remember, every pattern is a reflection of what market participants are doing, like collectively, right? Tim and me and Greg and times a million. Everybody's buying and selling. There's all this supply and demand. But over time, these chart patterns start to form that tell you something about what people are doing, what you have all these individual traders buying and selling, but collectively they move markets, and collectively they create patterns. Some of them are constructive, some of them are not very constructive, and it means something about how people feel about how they're trading, where they're placing their bets. When you get a pattern like a double bottom, where you come down, think about it, the prior drop here in gold from 1800, you don't find any buyers until it goes down to 1680. You make a lower low, supply is increasing, demand is decreasing, et cetera, et cetera. You rally, you get rejected again. If you think about it, up to this point, which was 2 weeks ago in gold, there's not really anything constructive about it, right? The story has been changing over time, but really it's the last 2 weeks that gold has got its act together. And the first sign that things were different was it didn't break a prior support zone. The prior 1, 2, 3, 4 rallies or sell-offs did break support. This one did not. When buyers come up and defend a support level aggressively like that, it's a change in character. It means they're not putting up with the bear's crap anymore. Like they are buying the dip. That's a change in character. And then you went up all the way to the prior high. You didn't do that the previous bounce or the one before that or the one before that or the one before that. That's a change in character. So to Tim's earlier point, you're just seeing these subtle differences in how gold's been behaving post, April. Really just this week or this month, right? The last 2 weeks, goes up to resistance. Does it sell off to 1680 again? No, it settles up there. Just like GDX, right? The last rally in GDX had a big pullback. The most recent one didn't drop that much. It just consolidated at the high. And then it made it obvious as to what level you needed it to break. You needed to break whatever the resistance zone is. And so I think anybody could have identified, call it 1750, that zone. That's the level that needed to break. It's breaking it today. It's breaking the 50-day moving average. So this is a situation where I would draw a line at the low of the base that preceded today's breakout. And I would say, look, I'm not going to overthink this. 1725, that's my alert. If this thing stays above 1725, I see no reason to be bearish on gold, right? I'm going to assume that buyers now have the upper hand. I'm hoping that we have more follow through and better luck than the last couple of times gold tried to bottom. I think we do, because I feel like, we're at lower prices, right? We're trying to recover from a lower level, which means there's more sellers that have gotten out of the way at this point. And it's being echoed by what's going on in gold stocks, just having very good constructive nature. But bottom line for me, 1720, we stay above that. I don't know if it goes to 1800, 1850, 3000. All I know is the bottom is in, and I can start to be more optimistic on this thing.
Yeah, I love the breakdown, the analysis. I think is really helpful to go through some of the detail of those technicals that you were looking at there, Tyler. Thank you very much. And Greg, you did mention the dollar. Part of what is aiding to this, and a part of the analysis, is the weakening dollar. Look at the UUP contract, or ETF, I should say, real quick. This one. And down here, test and support. We're at a significant level, and UUP, you can see it at 24. I believe that's 24.6 right there. That's a key line that you've drawn there, Tyler. If that breaks support, this is game on for gold. It's also game on for a lot of different commodities and probably equities as well. A weakening dollar does help a lot of asset classes, right, guys?
Absolutely.
Yeah,
it does. And here's the other thing that I think should give you confidence. Gold today did not need the dollar to go down. Just needed it not to go up. I mean, that says something that it was able to rally regardless of the fact that the dollar's not really doing anything today. So, I don't know. To me, that gives me a little more confidence. It didn't require a massive red bar in the dollar to catalyze and spark the breakout. It did it regardless. That's bullish.
I had a question in the chat. I've been chatting with her for just a second. I do want to go through it. Go back to GDX for just a couple of minutes here, and go to the trade tab, option trade tab. It looks like Patricia, long-term team tackle member. Patricia, great to always see you here in the show. You always participate and have conversations in here. Really appreciate it. I had a great question about her strike price in May. If you look at the 36-day contract, she has 36.50. And Tyler, the essential question, I'll sum it up because it was several back and forth a little bit here, is am I going to get assigned? Do I need to roll this thing right now? It's starting to move higher. She probably got a little bit less credit than the 107 that's priced for right now if it was a recent trade. And my answer was, and let me try to clarify for you, Patricia, if you're in the 36.50 in May, I understand when you're seeing the equity go higher and you don't want to lose your ETF, you don't want to lose your stock, you're going to get a little bit of anxiety, and you can always roll up or out. Like Tyler, you could absolutely buy that back and roll it up to like 39 or 38 and take a small loss on the option. But I personally think you could be patient here. We're up 3% on GDX, 4% here today. We're ripping higher. It's still an out-of-the-money contract, which means all of the value is extrinsic value. And if you're a cover call trader, and I know Patricia's gone through the course, the Tackle 25 course has some really good modules on how to manage these calls as they do move higher. But both of you guys are cover call teachers. You both cover call traders. This is a question we get consistently about, how do I manage it if my stock or my ETF is moving towards my strike price? Greg, what are your thoughts on that?
Yeah, so I'll be doing actually the Tackle 25 tonight, so I'll be talking about this exclusively. But I've always set a rule for myself. Hits my short strike, I roll it. Just no question about it. I guess the only question is, that's if I want to keep it. If I don't want to keep it and I've got some profit and I just want to take it, that's fine too. But if I think that there's some potential to continue on, which in gold I absolutely think there is, then yeah, it hits my short strike, I roll it. That way I don't really have to worry, too much of what it's going to do. I have that rule built into my trading and I stick with it, and it's served me well. If you roll at your short strike or just slightly into your strike, you can usually roll out far enough and get maybe a credit or even, maybe you take a little bit of a loss. That's fine. But you can give more time to get more value, right? And so you have to kind of do that before the intrinsic value gets crazy. If you wait too long, then that becomes a problem. That's why, like I said, for me, it's the short strike. That way I don't have to guess, Okay, is it gonna stop at 35 or 36 here? Is it gonna go beyond that? I don't really know. I would think that it's gonna go beyond that, but I'm gonna let the market tell me what to do. And so that's really the way I look at this.
Mm-hmm. Okay, and I'm putting a couple links in the chat here for people because I'm glad you reminded me of that Tackle 25. Patricia, it's a wonderful opportunity. I know you're a part of that team in tackle trading, the Tackle 25, because I've seen you go through the course. Join us tonight. Greg will be teaching this, and he can go into some more detail about some of these things here, Greg, talking about management, talking about roll and call options, all of those kind of things, and answer a bunch of questions. That would be great. Fantastic. Tyler, anything you want to add to that on rolling strikes or anything?
No, it's a great problem to have. I would love nothing more than to feel like an idiot every month for selling calls. And quite frankly, I've felt like an idiot quite a bit recently. So I'm making money on it, though. So it's very easy to – I think a covered call can be torturous because if you want to, you can make yourself feel bad when the stock goes down because you own the stock. Mm-hmm. And you can make yourself feel bad when the stock goes up because you're short the call. And it's all a matter of perspective. Mm-hmm. Yeah. But I would just caution you, unless you're a glutton for punishment, just don't beat yourself up. Like you really can't beat yourself up every month, no matter what happens, unless you get that sweet spot where it's just up a little. But you're making money overall. It's a good thing that it's running to your short call strike. Mm-hmm. I'll happily buy back calls at losses every month for the rest of my life.